Now to introduce our special guest, Sunny Widerman.
Hello, all.
Sunny has been preparing income tax returns for entrepreneurial Canadians since 2002. She specializes in helping clients take control of their tax planning by explaining the tax issues that directly affect them. She has been featured by Advisors Edge, the Canadian Media Guild, and the Professional Writers Association of Canada. Through her firm, Personal Tax Advisors, Sunny has filed over 1,000 returns to date, and whether you file on time every year or you have several overdue returns, Sunny is here to help. Welcome, Sunny. Thank you for being with us.
Thank you for having me. All right, let's get this show on the road. I'm very honored to have been asked to do this presentation. Doing this kind of presentation is something I really feel very strongly about, because I think that it's a very necessary part of being self-employed is understanding the issues of taxes that involve you. And so a little bit about who I am. I have been doing other people's taxes for money since about 2002, and since that time, I've personally prepared well over 1,000 returns myself, and a lot of them, most of them, were for self-employed people, and most of those self-employed people were involved in some way in the arts. So it's really been a focus of essentially my entire career as a tax preparer, working with people. And what I have found is that the information that relates specifically to people in the arts is not as easy to find. Certainly, even just information about self-employment and taxes is not as easy to find as it is to find information for like regular people's taxes. And it's one of my missions is to make that information a little more accessible and a little more available to the people who need it. That said, you may still wonder, I find in my years of working with musicians, very few people become musicians because they love taxes. It's just not, that's not really the reasoning usually that pushes you into this career. And although you've all chosen to be here, I want to talk a little bit about why I think it's so important that you are here. And I like to illustrate this with a story. It's a story I tell quite often, not because it's the only example. Actually, I tell this particular story because it sort of illustrates a lot of things at once, but the pieces of this story happen all the time. And it begins with an email that we received in really in the fall, so not during high tax season, in the what we call the off season, a couple of years ago. This was from a self-employed, she was actually an actor, so similar to being a musician, slightly different, but the bones of the game are the same. You get gigs, you get paid. She had been making very modest money for the last year, last decade or so, but she had not filed a tax return in a decade. She had not filed a tax return in a decade, I should be clear. And what tends to happen if you don't file tax returns is nothing at first, and then gradually you start getting letters from the Canada Revenue Agency, assuming you haven't moved and you are still receiving the letters at the same address they have for you, and they will request and then demand your tax returns. But they aren't actually armed, so they can't make you file it. So if you just ignore the letter and you don't file, they can escalate a little bit, and they can potentially freeze your bank accounts. Or in the case of this particular person, what they did was they garnished her. Now, I'm sure you all know garnishing is this process by which the tax people, the government, gets between you and your earned money. What they do is they contact your employer or anybody who wants to pay you, and insists that the pay that you have earned, first, a portion of it is to be diverted over to the government. So they get your money before you get your money, and it's applied against your tax bill. Now, the issue with her, of course, was that she hadn't filed a tax return, so they didn't really know what her tax bill was. So before they do that, what they do is they just make something up for you. if you won't file returns, if she hadn't filed returns, they will just sort of like guess at what she owed. They put together sort of a return that we call an arbitrary assessment. They call them a notional assessment. They basically make something up, and they present her with 10 years worth of their calculated tax bill, and they want the money, please. And if she won't hand it over, they will divert it from the people who are trying to pay her for her work. So this is what they've done. This is we're getting into the big guns here of the Canada Revenue Agency's arsenal. Now, at this point, I would like to offer a quiz question here. I'm going to say, don't answer the question, answer in the chat. Your guess as to how much of her income the government was snatching before she could get paid. So the payers would try to pay her, but they had to divert what percentage of her income to the government first. And I will say, this is a prize. You're trying to be, whoever is, we're going to use the Price is Right rules. Whoever is the closest without going over gets the prize of basically bragging rights on this one. So we've got a guess here, 50%, 10%, 15, 73. That's a very Price is Right answer. 71, hoping to get that, whatever. Lots of great guesses here so far. Okay, stop. Everybody who has guessed, thank you. Okay. Oh my goodness. I can't believe it. We actually get a winner this time. Bragging rights go to David Chen, who guessed 100%. Every dollar that was owed to her by a payer had to go to the government. And this is why, after 10 years of letters and warnings and threats from the Canada Revenue Agency, this was the reason that this is when we got this email. At this point, when she was no longer able to earn legal income anymore, that is when she thought, maybe it's time to file. Because what she can do if she files, first of all, she can bring that tax bill down, because the tax bill that the government guesses out for you tends to be on the high side, not the low side. And if they've done that to you, you can just file a return and it'll bring it back down again to a more accurate number. And it's also the start of kind of negotiating with them about when to pay and how to pay, and so that they will let you earn your money. So now she wanted to file 10 years worth of tax returns, and she needed a quote from us. And I did my best with this. I gave her as many discounts as we have. I just edged all the prices down, and then I applied a bunch of discounts and whatever. But the thing is that no matter what you do, 10 years worth of tax filing is not cheap. So we came up with a price. It was not a low price. I was really not sure how she was going to find the money, given that she was being garnished at 100%. But I sent her the quote. And to my complete lack of surprise, we did not hear back. For a while. We didn't hear back for a while. We didn't hear back for maybe 3 weeks. And then she got in touch. And she said, I'm sorry I didn't respond earlier, but I've been evicted. So let's recap. She cannot earn any legal money, and she has no home. And this is a kind of situation that we in the tax business, not to bury you in jargon here, but we call this a disaster. She was living a disaster. And with kind of no money to pay us to file the returns, to lower her bill, to get CRA to get off her back. This is, forgive the fairly funny image. I love cats, which is why I enjoy watching them do something dumb. But this was not funny. This was really, really, really bad. And what bothers me the most about this situation is that it was completely avoidable. And as much as she did not want to do taxes, nobody really wants to do taxes. Certainly people who are self-employed in the arts tend to be self-employed in the arts because they don't like taxes. They didn't, it wasn't like a toss-up. Well, I'll become a violinist or I'll become an accountant. Usually There's a clear, decisive, not, I don't want to be an accountant, in that decision to become a self-employed artist of any kind. So I know that she didn't really want to do it, but the fact is that what she had needed to do during those 10 years when she was building this horrible situation for herself, the things that she needed to do were not that onerous. She needed to know some things and she needed to do some things, none of which would have been as difficult as the situation she was finding herself in. And that's why I do these talks. This is really why. There was no reason for her to be in that situation. And when we finish up together today, we're going to have covered kind of everything you need to know to not find yourself in the position that she or this cat have found themselves in. It's not necessary. And you'll know everything you need to know to stay out of the most kinds of trouble, tax trouble. You can't do anything about your personal lives, but you'll be able to keep out of tax trouble just by knowing what we're going to cover today. And that said, I also don't know that I want you to be too obsessive about taking notes about everything. We will get a little bit technical here and there, but I promise that most of the technical stuff that I'm going to talk about is also available through a couple of resources that I'm going to make available to you all for participating today. So, when we talk in detail about, deductible expenses, and we talk in detail about the GST, HST, just be assured that we have entire resources just written for artists, ready for you, free of charge, that you'll be able to have and keep for all time. So don't worry too much if things are going a little bit fast. You'll be okay. You'll get to walk home with something. Well, I'm sorry. We're all home. Well, I'm not. I'm in my office, but most of us don't have to walk home from anywhere anymore, which is sad because we're all home. Okay. Anyway, moving on. By the way, I'm also going to stop at several points through the talk to give you guys time to ask me some questions. I got some questions asked sort of up front that I hope will be answered in the process here, but we'll see how that goes. But just so you know, there will be several times to stop and ask questions, and we'll have a little Q&A at the end if we have a bit of time. So I'll do my best to make sure that we cover everything. So starting with the basics and the differences between being self-employed and being a salaried employee. So salary, when we say salaried or when we say employment, what we're talking about is a kind of job where you get a paycheck. You know what it's going to be. You know that it's going to come on a regular basis, once a week, once every 2 weeks, however it works out for you. So, people who don't have to invoice and don't have to bill and that sort of thing, that's what we call employment, as opposed to self-employment, which is when you're a freelancer or, you're working gigs. And that is the type of tax issue that we are really focusing on, because that is where things diverge from what everybody knows about taxes to what fewer people know about taxes, and where, people in the arts really need a little bit of background. So what really makes the taxes involved with self-employment fundamentally different from the taxes involved with salaried employment? The first thing is keeping more money because you can write off business deductions. And each of these points on this slide, we're going to go into in more detail. So as most of you know, in order to maintain sort of employability as a freelance musician, there are certain expenses that you have to undertake yourself, such as the maintenance of your instrument, maintaining a little bit of a home office so that you can actually manage your gigs and so on, storing your equipment and so forth. And that all costs money. Everything costs money. And what happens is you do not get taxed on your gross being what you bill people. You don't get taxed on that. You get taxed on what's left after you've spent the money that you needed to make that money. So you have your fees. Then from those fees, you pay your expenses. What's left is what's called your net, and it is your net on which you get taxed. So a salaried person getting a salary of $500 pays tax on the full $500. A self-employed person getting paid $500 first deducts a bunch of business expenses and gets taxed on that amount. So you get to keep a little more money. Next, of course, you have to be aware of the rules involving the GST or HST as it applies to you, depending on what province you're in. This is obviously something every Canadian kind of knows about, that they pay it, but only self-employed people really have to understand a little bit about how it works and when it starts to be something that they have to concern themselves with. So we'll talk a little bit about the GST, always lots of information about that, always lots of questions about that. Unlike a salaried employee, you know, well, we've all been salaried at some point, I think, where you get your salary, but there's an amount withheld. So they're withholding an amount for taxes, Canada Pension Plan, EI, and those withheld amounts actually go straight to the government in your name. And then when you file your taxes, filing your taxes or preparing your taxes is actually the act of calculating your true tax burden. And then they compare the tax burden to what has already been set aside from you. If what has been set aside exceeds your tax burden, you get a refund. And if what has been set aside is not does not cover your tax burden, then you have to pay the excess. And the thing is that while people who are salaried have taxes withheld at source, they don't even get that tax money, it goes straight to the government. When you're self-employed, you have it all, and out of that is going to come tax eventually. So it becomes your responsibility to set aside an allowance for tax. And we're going to talk about how you can decide how much to set aside and where to set it aside to make sure that you're ready for your tax bill when it comes around. And finally, well, not finally, sorry, semi-finally, you have other documents that you, as a self-employed person, you have slightly different filing obligations. And by filing, we mean when you send information to the government. That's what filing means. There's different information that you as a self-employed person send to the government, and there are specific deadlines about those filings. The deadlines are very important. We will talk about why a little bit later as well. So you need to know what those obligations, what those things are that you have to file and when exactly they're due. And now finally, you have to keep good records, because as a self-employed person, your taxes are more complicated. You have to apply more knowledge. You have to apply more judgment. You have to make more choices about what you file as part of your tax returns. And because the Canada Revenue Agency can come back to a previously filed return and ask for information and proof and supporting documents and calculations, when you do file your tax return, you're not really finished with it. You have to make sure that you keep your records, and you keep them for the amount of time that CRA could potentially look back and legally demand that you prove yourself to them. So we'll talk about the nature of the records that you have to keep and how long you have to keep them.